Well, today's video blog, is going to be all about accounts receivable and notes receivable from the accounting manual. Receivable chapter goes through several important topics. For example, the classification necessary. You have to be able to classify things as current and non-current and the different categories according to students, customers, employees, affiliated organizations, etc. Okay, we'll talk about that more in a minute. And let's see if we can go just sort of page through here real fast, flipping through the pages. We have to classify them into groups, first of non-current and current, and then groups according to debtor, whether they are affiliated entity, an employee, or an unrelated third party. And then we will see more about this in a minute. Okay, right away we have in mind breaking them into current and non-current, and then into subgroups of affiliated entities, employees, and unrelated third parties. And then in a few minutes we're going to have related party transactions to look at. And look down here, and the accounting manual goes through each of the groups, gives advice and good guidance, not at all to be dismissed by me, but since I'm going through and mostly looking for reporting requirements, this talks about good procedures and the way things ought to be handled. All are right. Okay, when things become an entry, when they become a receivable, for example, when the appropriation is voted in the higher organization, it becomes a receivable, and the organization that's receiving the appropriation. Okay, and then the accounting manual talks about having which method of accounting you're going to use for accounts receivable, direct write-off or the allowance, and it illustrates how to do the allowance method, which is the Sun Plus way of handling most of the things. And it talks about authorizing write-offs, and then we have a classification loan receivables. Another section where the chapter is accounts receivable and loans receivable, and we're now in the loans receivable category. And then we need to categorize these things, and let's go down here to where we will spend most of our time here looking at this. So we have two requirements as far as categorization of our notes and loans receivable. Okay, they need to be categorized. To prepare financial statements, it is not sufficient simply to compile a schedule showing the names of the debtors and the amount due. Additional details as the type of borrower, employee, affiliated organization, unrelated third party, and related third party. We'll look at that in a minute. So we have additional details as to the type of the borrower, the terms of the payment, that is it a monthly payment due in 3 years, over 3 years? The interest rates and security are required to be disclosed for these assets. Disclosure is also required to amounts due from officers, employees, and affiliated entities apart from other debtors. So we basically, it's a little bit redundant here, but we basically have 4 categories: officers, employees, affiliated entities, and other debtors. So the 4 categories that we're putting them into. And the amount of the allowance for uncollectible account needs to be disclosed. And then finally it says that this information cannot be easily displayed in the statement of financial position. It should be in the notes to the financial statements. And that's the way we're doing in the Sun Plus world. And so let's look at it. All right, and we'll go to the financial statements, and we'll go through accounts receivable here. And you see not too much is shown on accounts receivable and the loans receivable. Several things to point out here is that we have accounts receivable, which are all current, and then we have loans receivable, which is a current portion, and then the non-current portion down here at the bottom, both connected to note 6. So we're interested in note 5 for the accounts receivable and note 6 for the loans receivable. So let's go down and look at that. Okay, skipping down to the notes here. It takes a second. Okay, note 5 and 6 we're interested in. So here's our cash note and our investments note we talked about in previous videos. And now we're down to accounts receivable in note 5. And you could see that this is the way that this complies with the writing that we saw earlier. It's a little bit different, not specifically laid out in the writing, but this is what you need to do. You have one notes receivable for the organization that is immediately above you, or accounts receivable, one account showing. If you're a union, does your division owe you some money? Or if you're a conference, does your union owe you some money? It's there in that line, this line right here. And then you have SDA organizations that are below you or within your territory. So if you're a union and the conferences owe you money, it would go here, or your organization, your union and your university or your college owes you some money, it would go there. You see, so this is the ones above you in the hierarchy, for lack of a better word, and these are the organizations that are below you. And then these would be organizations completely out of those. So it covers the whole world of Adventism, these first 3 lines. Then you have administrative employees, which have to be broken out. Administrative employees, we're going to see, come from note 19, are listed, but they are your officers, okay? Your 3 officers at a conference or a union, and it could be your president, secretary, and treasurer, or if you're a university, it could be a president, a vice president for finance, and your vice president for academic affairs and vice president for student affairs, any administrative employees. It also includes regular employees that are on the executive committee. So say a college would take a regular faculty member and designate them as a board member, then that person becomes an administrative employee. Or a conference takes one of the department directors and puts them on the board, then that person is an administrative employee according to this note. And so those balances have to be separated out and shown separately. One way of looking at administrative employees is that all executive committee members that are employees are in this category, plus any vice presidents, whether they are on the executive committee or not. Okay, so I can't imagine an executive committee that doesn't have all the vice presidents, but if you happen to run across one, even if they're not on the executive committee, they are considered an administrative employee. So the quick rule of thumb is if an employee, no matter what their job, if they're on the executive committee of the organization, they are considered an administrative employee and need to be their receivables separated into a different line on the financial statements. Then you have other employees. These would be all the rest of the employee receivables that are not administrative, and then just general accounts receivable. So those are the 5-6 categories that are required in our disclosure of accounts receivable. The same thing is true with the breakout on loans receivable. We have affiliated SDA organizations, and then the loans here are being shown. Okay, let's look at housing loans. Employee housing loans. Okay, notice right away, so we can keep everything sort of all together, that the administrative employees are being shown differently than other employees. Okay, so however we defined administrative employees up there in a previous discussion about administrative employees, all of those employees that are on the executive committee, their loans have to be shown separately. And so employee card loans, they would have to be shown separately if they were two different groups of employee car loans. The inference of the way this is showing here is that all of these car loans are for other employees, but if there were any administrative employee car loans, they would need to be shown in a separate line. Now, the second point of what we need to be gathering from this note, this example, all right, the first point was breaking out administrative employee loans from other employees. It has to be done for every loan category. The other important point is that they're grouped with a description of the loan, whether it's secured or unsecured, the interest rate of the loan, and the payment terms. Okay? You see that's being done for every employee loan category, so it is conceivable that you may have to have 2 or 3 lines for employee car loans that deal with disclosing all of this information. You may have a group that's secured and a group that's unsecured, for example. Okay? And that is important. And you can see that we're coming down here. This is the total loans, allowance for the doubtful accounts, the net loans receivable, and then a portion. This is the total loans, and this is the portion that has been moved to current, showing in the current section, not really moved, but this is the portion that's showing in the current, and then that leaves us the amount that is long term. But let's just recap this, is that accounts receivable and notes receivable, you have to break them into these categories, and especially troublesome is breaking out administrative employees separately from other employees. That's sort of a new or troublesome concept, and the same thing is true on the loans receivable. And the particularly interesting thing under loan receivables is there has to be disclosure of the terms of the actual loan, whether secured or unsecured, the interest rate, and then the payment terms. Now, I think what I would like to do is to stick in something right here that is not related to accounts receivable, but related to what we're talking about, and there would be no other place that I could put this into a video. And so I want to just show it to you right here. We are showing all those details about whether it is related to a higher organization or a lower organization. We are showing that because of what is called related party disclosures. Okay? And so the higher organization and the lower organization are related parties, and the employees are related parties. And accounting rules are very clear that related party transactions are permissible for sure, but they need to be separated out from the non-related party transactions. And so that's why those are having to be shown separately. And so an administrative employee is a related party, a loan to a higher organization or a lower organization, since they are related parties. And in that category of related parties is this rule here that says that the compensation of administrative personnel have to be disclosed. Because the administrative personnel are drawing a salary, that's considered a related party transaction, and so we are required by accounting rules, generally accepted accounting principles, IFRS, US GAAP, segregate out related party transactions in as far as disclosure is concerned. And so we're required to disclose how much was paid as employee-related expense to our administrative employees. So you can read this note right here. Total employee-related expenses reported on the statement of financial activity as $6,409,000 for the year of 2001, etc. Included in these totals are amount for administrative officers, so you can see they're listed, administrative officers, vice presidents, and members of the governing committee who are employees, which is a group totaled these amounts right here. Okay, so the total paid to your administrative employees have to be disclosed. And I mention this here because that sort of it's not related to accounts receivable. However, it is related to this idea that what is an administrative employees and segregating out their accounts receivable, segregating out their loans receivable, and here we have to segregate out their salaries and their total employee cost. So that pretty much does it for this video, and I hope that it has been useful, and we'll stay tuned for the next.